Bitcoin Live. I am here with the Minotaur team, and I'm representing the Powerlaw team. Um, my background is becoming more and more busy. There is even a fun here. Okay. Um, and we basically look at the price chart. We use different tools. We show the liquidity levels. Um, and Yeah, let's dive in. So recently, I really love this chart. Uh, what this chart shows, it's a few things.
Is this the chart, Giovanni, that I posted a comment on?
Yeah.
Yeah, cool. I wanted to ask
So
you about that
it's a
actually.
really cool chart because it has the simple power law that is a red line. It has a floor that you can find different ways. I think the best way to actually characterize is like the 1 sigma deviation. It's really interesting because of a lower bound, it's more like 1 sigma, but in any distribution, 1 sigma is really amazing, because supposedly that is only, in particular, if it is one side, right? Two sides will be 65. So one side will be 32% of all the data. And you can see it doesn't contain 32% of all the data. It contains almost everything that is below the power law. So it's really strange that there is this asymmetry, right, between, because you will expect 50-50, right? But um, almost all the data is contained here. The reason why this red line is still kind of a middle ground because you have this large deviation. So they are rare but large. These are very common but smaller, and so they kind of balance each other. But really, when we are below the power law, we don't deviate much. It's really amazing. Um, it's really interesting. Something that we need to study better, to understand what is going on. But anyway, and then there is this model that is the green band. There is the green line plus the green band. The green band is the uncertainty level because whenever you do this calculation, given how much error, how much variation there is in the data, you're going to have always some um, some range, of variability. Same thing with the power law, right? We have a range of variability. I just told you that this lower level is 1 sigma away from the power law. Um, I don't. I have here another line up, but it's not a corresponding 1 sigma up. I probably should do that. But anyway, these are what this band represents is this new model that we are developing. It's something that actually I started to explore a long time ago, and then I abandoned for some time. And then recently, given more periodic models do not work very well, right? If you because I got distracted by how well spaced these three peaks were. With one peak, you can never determine anything, right? Because there were 4 years between these two peaks, but hey, is that a pattern? You cannot tell. Then we had this double peak thing, and the problem with that is which one is the peak? Is this the peak? Is this the peak? And if you use this as the peak, then you settle on this idea that there was a 4 years here, there is another 4 year here, maybe there is another 4 year peak, right? The problem with that is that you will have to throw away this first peak. And usually, when I was doing that, in this period, like in the last couple of years, where most people were settling on this idea that we had a 4 year cycle, was well, this was an anomaly. It happened before the halving, so it didn't matter. Blah blah blah. But if you actually create this log periodic periodicity, and it's a little bit of difficult topic because maybe not many people are familiar. Basically, do you know how this curve graph becomes a straight line when we use the log of time that unfortunately TradingView doesn't have as an option, right? If I had a chance to see how you have the option to change this log thing, if I do log thing, if I delete it, right, if I unselect it, I get a linear version of a price, right? And it looks like a curve, like it's going up like this, like a very fast parabola. Parabola is square. This curve here is 6 times to the 6. And these oscillations will look like this, right? Now I choose log, and it becomes a little bit more organized and easier to see. And this is what you get. If we had an option where I had another L for X, now this curve line, they look like a straight line. So it's a further simplification. This is why we talk about this power law, because it looks really like a simple thing when you plot it in what is called a log graph, log of price and log of time. Now, if I plotted this graph, this curve here, uh, in a in a chart where time was linear, you will see these oscillations repeating. It will look like a sine wave, maybe a complicated sine wave, because it doesn't have just a peak. It has further peaks. It has really three structures, right? It has a one main peak plus two side peaks, So it's a kind of complicated oscillation with three bumps, let's say. But notice this, right? How these three bumps look like in a chart where I don't have the log of time. Like I say, if we had the log of time, they will look like repeating perfectly. But we know what happened in the chart where we have the log of time. It gets compressed, right? And so the compression does the opposite of what we are seeing here, that is actually stretching. Because notice what happened, right? I see these three oscillations. Then imagine I'm stretching them like almost in a rubber band, and now you're seeing them here, the same three oscillations. And then you stretch them even more, and you get them here. So this is what is a log periodic, because instead of using time, you're using the log of time. And so they look like the same oscillation, but stretched and stretched. And if you do that, then you pick up a lot of these smaller oscillations that were kind of an afterthought, unless you have this more complicated model. Like, for example, you see this first peak here is represented by this model. Uh, the interpretation of this big event, it was like one big event with two peaks. There was a peak here, then a middle peak, and then it doesn't even bother in distinguishing these two peaks, consider it like one big event. So is this the correct interpretation? It would be fantastic if it was, because the cool thing is that now you can write an of it for the people that don't know the math. It took me, even myself, to sit down and realize that is the case. Then it's only one power law. It's a power law that has what is called a complex number. One number describes a long trajectory, and the other number describes the oscillation. But it's one single power law. Basically, we're saying we have one single formula that you can write in one single line that describes both the long trajectory and the oscillation. If that is true, will
So,
make this story about the power law even more
so,
interesting.
so this green line that's forming is independent of the price action, right? That the formula's created the green line, and you're just overlaying it on the
Yeah, it's
price.
not following you do it
Wow.
outside, right? What you
Yeah.
do, we construct it. We do this thing called the spectrum. It's a log periodic spectrum. Basically, there is a mathematical transformation that goes from the time to frequency. So it's telling, you're basically asking, when probably I've seen it. I don't know, when people look at the voice spectrum, right? They talk, and then I look at all the main frequencies in the spectrum, right? Uh, like for there'll be some dominant frequency when a men talk, with are lower frequencies, so you can reconstruct the voice from the spectrum, right? So we are doing the same thing. We are looking at the main frequencies in the data, and then we are making a model that basically combines the power law and this frequency, this main frequency. Is not we're not averaging, we're not, it's not that we're trying to track the price. The price is tracked by the model. It's the other
Yeah.
way around.
Wow.
We simply say, let's look at the spectrum, let's find the main frequencies that dominate these oscillations. The curious thing is that you have to actually go to this log periodic space, that is one more constrained, that is normal oscillations they are not log periodic. You have to have some very interesting behavior. Now, we could, there is a possibility of overfitting, but we see this big, huge frequency in the spectrum. So they are real. Now, are they persistent? Are they going to be there in the future? That is the big question. The problem is that we have only three oscillations. So, any type of statistics based on three oscillation is silly. But it's pretty interesting as an idea. Now, you cannot extend it. What is interesting, though, is that differently from the periodic model, didn't predict a peak, like a slight peak, a very slight peak. It's kind of like the beginning. So do you remember I told you there is this three component structure? So basically, it's the beginning, is this, this peak here. We are seeing the beginning of this peak. And this will stretch even more. In fact, the big peak will be in 2028. This is when we are going to have the next huge big peak. At the end between 2027 and 28, if you do the projection. But you see here, it predicted correctly that we will not have a huge big peak. In fact, we will be close to the power law. This is why we moved close to the power law and we didn't leave it, right? When many people were expecting, actually, we went up maybe a couple of times at least relatively to the power law. This model predicted that was not the case, and it even predicted this downwards direction, that we are observing now. Now it says that we should have a bottom in August. Now it's below the support line, but that is because it doesn't have any information about that. It doesn't know that we have this weird phenomena where we never go below 1 sigma, right? So it's possible that even if we go down, maybe there are a couple of scenarios, right? One scenario is that we continue to move. That is also the other very cool thing. You see how even if we had these corrections, look, here we moved parallel to the power law. Here we moved parallel to the power law. To be a power law, like I say, I have this expression. I say we need to do a lot. The price needs to do a lot of power law things. Most of the time it needs to move along the power law. You see how even if we are lower relative to this line, we are moving parallel to it. That is really cool. And it's not an optical illusion. If you calculate the local slope, that is what I have other indicators to show that you calculate it point by point. The average value of that slope is this value. So this is really cool because this is telling it doesn't matter where we are relative to the reference line. As long as we move along the power law, we are going where we are supposed to go, right? To 1 million in few years. Because of it, at most, the difference between year and year is a factor of 2, right? So even if we continue to move just from here to here, even if we imagine we just follow the bottom, but we almost never do because the bottom is also an extreme value. So most of the time we are inside here. In 8 years, we should be close to 1 million. Now, if it is 700 instead of 1 million, it's okay because anyway, we will make up the 300,000. Maybe you need a few more months because this is what it does. As we go very, very fast it's almost like lanes in a highway, right? It's like there are different lanes. You spend most of the time along the lane, then you very quickly shift between one lane to another, right? Like a tap in here, tap in there. But most of the time, you're actually moving in the same direction, right? It's really cool. So it's possible here. We simply move. We continue to move like this, like this, like this, right? And we are parallel to the power law, and we kind of reach a bottom in the sense that the model says this should be like the theoretical lowest point, but they're still moving up, right? And then we continue to move up, maybe at an accelerated pace, maybe we shift lane. Yeah, so it's interesting, um, yeah, this is the projection, but there is a lot of signs that I think we kind of reach the bottom and we are moving along. We are not ready to go to a bull market, but I think the worst times are past. Right? I don't see a huge big correction happening. But yeah, this is what I see from the chart, and Marcus will tell us more looking at liquidity.
All right, let's see. What do we have in store? Let me share my screen here. Let me know when you see that because I have one monitor.
Yeah.
Awesome. All right. So this is the the void as it stands now. We're looking at the bigger picture when we 24 just for context, and until the top that we put in October, and then where we are now. So let's just when we look at it, when in doubt, zoom out. So when we look at it from this perspective here, we can see where the big liquidity is and what's been taken off the board and what remains, right? So we knew during the bull run, we left a tremendous amount of liquidity behind at the top. That still remains, that's in place. And then we put in the top in October at about 126K. Then the market reversed. We reversed and we started to liquidate the long side of the market in mass when we were in the mid-November. We took out a big tranche of liquidity, and then we took out another big tranche in February. So there's not a lot left to the downside. That's what everybody wants to know. How low can we go? And based from a liquidity standpoint, which liquidity is the fuel for price. Price and liquidity are like chicken and egg. It's like one and the same. The price action creates the liquidity, and the liquidity draws the price. So which comes first? They are kind of one and the same if you really want to split atoms, but they are definitely counterparties of each other. Also, the price action is necessary to attract market participation. There's lots of execution algorithms running that create this price action that allows it makes it very attractive to traders to take positions. And those positions are necessary for the exit and transit liquidity that's needed to move to the next area. So the way I like to break markets down is in value areas, and I'll show you that in a minute. But let's just take a closer look at what remains on the table now. Uh, this last major liquidation event that we had here, and that was in February, the beginning of February. Um, when a major liquidation event occurs, the market goes into a period of consolidation where it seeks value and creates a new auction. So that's what we're currently in, a new auction in a new value area. Then it discovers and takes liquidity in another area. So right now, this particular price action that we've been enduring for about, we're going to check the time on this, is creating the new exit liquidity that we need to go to the new area. Okay, that's how this works. So let's check the time really quick, like we always do. So we'll just kind of monitor it. When we get in these what we call bear markets, really, bear market, bull market is just the name of an occurrence. What's really happening here is all liquidity is being taken out of the market at the same time. Starts with 100x, 25x, 10x, 5x, 3x, all those positions, stop losses, limit orders, everything's being swept. It just takes a long time for the larger liquidity to be taken, which creates these large moves. So they call them bear markets. It's just the market going through its fractal process. So let's get the time. Typically happens in a bear market. You have what the retail crowd calls these bear flags, and then we discover out of them. So let's see how long we're going to look at the previous one. We'll get the dates on that. We were in this range here for, I think, about, we were in this range for 70 days, and we moved, we discovered to this new range and liquidated this other short long position, and we've been here for 65 days. So we're on pace to perhaps be thinking about getting our boarding passes to move. So at some point, we're going to be looking to move out of here. More than likely down, because based on time and depth, we haven't completed all of the liquidation of the long side. The market likes to move in threes. Here's 1, 2, 3. There's a third level here. That's one way to look at it. Another way to look at it is we haven't tapped the market. Also, we had a range here in 2024. Well, that range continues over here, and we haven't fulfilled that yet. So we'd be looking at an event similar to this. There's a liquidity for that. So that liquidity takes us down to about starting about 57 and down to 52. There is not any liquidity to bridge. There's a gap here, a significant gap. Going to take time to fill that in. So I'd be looking for the market to find some type of support there. This old liquidity here is dissipating. It doesn't necessarily have to be taken, which would be good, because that means we can come down here, have a healthy liquidation, and start our process back up. So let's I'm going to zoom in here a little bit more closely and take a look at liquidity that's right in front of us. So the way I like to look at it closely is I like to put my volume profile back on here so I can get a really clear picture of the range that we're looking at here. So as I said, I think the bull trap was in here, possibly. It's very similar to the last one, but the market never gives it to you easy. It's got to throw you off, right? That's what it does. It's a wrecking engine, right? So everybody and their mothers were expecting the dump to happen earlier, just straight down, and the market put on a pretty significant reversal. I think that's just to squeeze a lot of shorts. There was a lot of shorts piling on here, and that's squeezing them. We also had some news events here that's also kind of might have created some turbulence, but I still think the path is down, in my opinion. Also, I wanted to highlight this range again from 2024. It's over here. We have a high of that range is the value area high. There's a point of control in the middle of the value area low, and we have a lot of liquidity at the bottom of that range. That typically, when we get in these ranges, we tend to rotate through the range and then we sweep the liquidity. So there it is, and that's the target that I'm looking for. Before I go, I'm going to show you a little bit closer. Let's zoom in a little bit closer. We're going to look at 4-hour candles. And yes, we are tapping. We've kind of been up the last couple of days. Some local targets that I'm looking at here is I'm looking at this. I'm looking at about the 74K range that we would probably sweep and swing failure. That kind of like what we did over here in March. So we probably take out the remaining liquidity that's left here, 25x, and come back down. And that should start us back down. There is more liquidity, so let's look at the 10. Let's bring that in. There's significant liquidity on both sides. There's a ton of it down at the bottom here. That's fried chicken, people. Popeyes. Cajun style. That's going to be taken at some point. But then there's also the bullish case is there's a lot of short fried chicken above too that goes all the way to 82K. So it's just a matter, is this going to be the bull trap right here? Is this the completion of the bull trap, or is there more in store? Either way, the market will do whatever it needs to do to liquidate the most positions. It's a deleveraging engine. So uh, even if we do go up here and tap this liquidity, we still, my opinion, the route is still going to be down until we take out that long side. So let's take a quick look at that. So ultimately, we have a lot of liquidity below as well, tons of it. And I don't think we get out of the bear market until we sweep that. So more specifically, it's a lot down low that's right in our back door here. So that's my observations. And let the liquidity when in doubt. I love liquidity. I'm gonna stay with it. Yeah. So that's all I got for you guys today. Yeah.
Definitely looking interesting in the short term what it's going to do. But I think you're right. I think ultimately it's going to get back down for a final sweep. It doesn't make much sense unless it does that. I think it would have moved up too quickly. What do you think, Giovanni?
Yeah, I mean, it all makes sense. Um, it's kind of aligned with what I was saying that probably the price doesn't have a lot of fuel right now to move forward. And so it's always a combination of these internal rhythms and where we are in the cycle, and the liquidity that is available. So I I never saw like a discrepancy, like I say something that is completely opposite of what Marcus says. We always align.
They're lying. Yep.
Mhm.
Yeah. So it's okay, it's good because it's a consolidation period. It's a good opportunity to buy cheap Bitcoin. One of the suggestions, if people want to learn how to do, um, for example, cover calls, that is something that they do almost religiously. I'm actually trying to optimize if it is the best time to do it every 2 weeks or every week. But you don't get a lot of money, but you can do it every week and basically get some income coming in. I use it to buy more Bitcoin. I do it all the time. I'm also using iBit. You can do iBit if anybody has invested in iBit. It's easier to there is much more liquidity there, and is one to one with Bitcoin. So are all things that people should consider. This idea of hodling. You know, it maybe was good in the past. So it's good for people that have thousands of Bitcoin because I don't want to bother trading them. But if you have a small amount, you should do everything possible because it's like really a once in a life opportunity. You don't want to lose them, of course, right? You want to be as conservative as possible, but at the same time, you want to learn how to do a little bit of yield on this investment of yours. And there are now that we have all these instruments, like futures and options, maybe you can do things that are relatively secure. I never got executed, on the um, on my cover calls, um, and if there is even you are close to the risk of that happening, you can always roll them because these are extreme values. So, you want to choose values for your cover call strike price that are very far away from where you are. We have even tools. I have developed like a Monte Carlo simulation to tell us what is the strike price that you can check. So anyway, Costa, do you have some charts that you want to show about what another tool is this Minotaur team trading bot that we developed together, and it's a very powerful tool. Now, of course, this tool is different from doing the cover calls. The cover calls work even when nothing is happening, even when we move sideways. Any trading bot would need to have some volatility. But yeah, Costa, do you have anything to show us?
I do. I'm using a new browser and it's not letting me share my screen because my settings. Marcus, do you have
Can you take a
Um,
screenshot of what you wanted to show?
It's not letting me share my screen. I might be able to, if I jump back in and jump. Do you have anything trading Bitcoin, Marcus, you can show? My permission's not letting me share my screen.
No, I'm at one monitor setup. I don't have it here either. Let me see if I can get something going.
It's a bit annoying. Hold on. I might be able to jump in. I might be able to do it a different way. Hold on.
Any questions coming in, Giovanni, or not?
Yeah, we can play with the questions. We can.
I'm going to join as a guest on my other browser, and I'll see if I can.
Okay.
Do it just. Oh, there we go.
Yeah, the other Costa.
All right, cool.
Okay, here's wait. You're in. I'm not sure it allows me. I think it's you're not allowed. I don't know. Is this the same account? Yeah, now it's allowed. Try. Okay, we can try to discuss some of the questions. So this one, yeah, probably you're referring to the chart that I showed before. No, we are not moving. There is no moving of any post, right? People have so much misunderstanding with this support level. First of all, there is nowhere in the theory where the support level comes. Maybe one piece that we never formalize that is has probably to do with the cost of production, right? So if you bring in the hash rate and you make a model based on hash rate, the problem with that is, the cost of electricity changes from country to country. So you can create a cost of production model that comes very, very close to this line. This line is kind of an idealized line because you take just a certain percentage, or even if you use statistics like 1 sigma, it's based on the price action. It doesn't bring in hash price, but there is a relationship between hash rate and price that is the square. The price, the hash rate is the square of the price. And if you make a model of a price, basically the square root of the hash rate, then you get something that is close to this line, right? That is the only thing that comes from the theory. But in general, we don't know why there is this restriction there, right? That could be a reason, but it's not part of a statistical discussion of a power law. So, and this is why, for example, for gold, that is still a very pretty strong power law, that floor is violated, because if gold moves relatively to USD, you have this additional piece of information. And these moves are easily 2 or 3. And remember, this floor is about 50% away. So it's easy to violate. It's the other way around, where it's a miracle that never been violated. Because you could have expected, usually when you have anything statistics, you will have expected, 2 sigma changes. 2 sigma means 91%, something like that, right, of the data. And given the variation with Bitcoin that sometimes are extreme, 3 sigmas will have been normal. In fact, with the top, you get 3 sigma variation. Some of the tops are even 4 sigmas variation, So that are standard deviations. In a distribution, right, it's like looking for very tall people. Yeah, there are not many tall, 6'4", 6'5" people, but they do exist, right? So imagine if we go in a land where everybody's within 1 sigma in one direction, just with like nobody's shorter than 1 sigma variation. But I will have to calculate what that means with human heights. But just to give you an example, imagine the average in America is 5'10". I don't know what it is, but let's say that it is, and then there are not many people that are shorter than 5'2" or whatever, 5'6". In fact, actually none, because we never violated. That will be weird, right? There is nobody below 5'6". That will be very strange. And this is what you're getting, you know. So it's kind of interesting that we don't have values below this. So it's actually much more normal to have something like this. And I even said that the model, these oscillations model, doesn't know anything about. It's because we didn't include it. And I don't know even how to include it. It's something. That's why I'm saying it's something that needs to be studied more in the model. The model knows that there are these oscillations. They have a certain amplitude. It's trying to reproduce all the components. And if you go in the past, we can go in the past. It worked pretty well because let's see if we ever go. Well, look at this, right? According to here, we should have violated the floor, but we didn't because we went up, right? We had some kind of turning place. It doesn't really reproduce perfectly the price action because there is something else beside these internal um, oscillations that are a simplification, right? They are an idealization. But most of the time, we have, here it got the floor. They got the floor. Now the floor was supposed to be there. In this case, we went lower. But remember, this is why I'm expressing it as a band. There is always some level of uncertainty. So even here, the floor, if we stick to the floor and we don't go below the floor, will be still within this band. Anything within this band is fine because it's within the typical oscillation, the typical noise with Bitcoin that we have associated with Bitcoin. So
Giovanni, I have an example I can
yeah,
show.
yes, exactly. Yeah, go ahead.
All right, I'll share
Stop.
share my screen here.
We bring back Costa because maybe he's. Yeah, go ahead.
All right. All right, let me know if you see that. You see that, Gio?
Just a second. Yes, go ahead.
All right. This is an example. We have a lot of settings that we run with our algorithm. It's like a Swiss Army knife. It can be configured to different types of time frames, different types of ranges, and different types of assets. So it's like a Swiss Army knife. The way we operate this algorithm is we're not market makers. We follow the market makers. It's kind of like if the market makers are the sharks, we are the pilot fish that swim underneath the shark's stomach, right underneath the shark. We try to be in concert with them and follow them. When they feed, we feed, but we don't get in the mouth of the shark. So our algorithms follow and model those movements. And those movements, what do the sharks feed on? They feed on liquidity. So our algorithms are tailored or optimized to do the same thing. So this is just a very, I just pulled this up. I really wasn't prepared, but this is one that is an example of one that we have running that I run myself personally on the 5-minute time frame. Bitcoin, USDT. It's a long setting. And what I wanted to highlight here, just to show you that in action, that it actually follows the liquidity, which is what the market makers are following. We can go to this event right here. I think this was on the 7th. This is when my favorite orange man put out the tweet about Iran or something. He tweeted something and it kind of made the market rip there, made a big run. Well, there was a lot of liquidity right here in the market at that time that had been building up. I'm just going to take my marker here and draw it in. There was a lot of liquidity right here. And I'm going to show you that. And the market makers are liquidating those positions, but they're taking the opposite side, right? So our algorithm is doing the same thing. It's building positions when the market is going down and it's selling them on the way up. So as you're liquidating a lot of shorts here that we're shorting the move down, we're selling into those shorts. So I'm going to show you that example here on Trading Different. I have the same time frame, 5 minutes pulled up. Here's that same event. You had a lot of shorts that had been following the market down. right here, our algorithm, as it's liquidating longs, longs are being liquidated, market's going down, shorts are coming into the market. Our algorithm, just like the market makers, are taking positions right here during that pullback. Then when the orange man put out the tweet, Trump put out that tweet, the market ripped, and then the market makers took the market into the shorts and liquidated those shorts. But these long positions were sold into the liquidation of the shorts. So let's go kind of lock that, freeze frame that in your mind. The drop in price is the liquidation of the longs, creating inventory that's sold at higher prices when you liquidate the shorts. So let's see if our algorithms did the same thing. We'll go over here. All right, here it is right here. Same price action. Oops. Move it over just a little bit where you can see it. So right here, we already know, we identified there was liquidity in here. So the market makers are driving the price into that liquidity. These are late longs coming in the market. And our algorithm, as it takes positions, it lowers its average price in the asset, and the take profit also gets lower. So then when the market reversed to take out all these shorts that were following this move down, they got taken out right here on this move up. Our algorithm sold at a profit into that move. So we sold out of those positions. As the shorts are being liquidated, they're forced to sell, and our algorithm is selling the contracts to those guys. And that process just continues over and over and over again. As you can see, it's taking positions on the way down as longs are being liquidated, and it's selling those same positions as shorts are being liquidated on the other side. It just does that 24/7, 7 days a week. And that's what I love about this algorithm is it takes if you were trying to manually do this, you wouldn't be able to sleep and eat. You'd have to be watching all the time. Like right here, this was at 10 o'clock in the morning. This one here, this exit was at 3 o'clock in the morning. This is a great example right here. Well, I wasn't up at 3 o'clock in the morning, and I was barely awake here at around 10 and 3. It's just doing that all the time, building building revenue, cash flow, and Bitcoin automatically. So if you don't have an algorithm, it's kind of like it doesn't even make any sense, because Bitcoin was born of algorithms. Like the stock market, bond market, legacy markets, they are slowly being dominated by algorithms. But Bitcoin and crypto was born in the algorithmic environment. 99% of all the traffic is algorithms. So how are you going to beat all these algorithms unless you hotwire your own algorithm? So that's my 2 cents on that. So I hope that gave you some insight on how this works.
Yeah.
Yeah.
Okay. Yeah.
Sorry, I've got echo.
Good.
Hello.
We hear you.
Yeah, I'm hearing myself twice. Which
Very hard to deal with.
yeah. I think that's better. Yep. Okay, cool. Yeah, no, I was going to bring up a similar chart to Marcus, just showing that, once there's been a 50% drawdown where we're in, it's such a good time to start trading. I know, Giovanni, when you first met us in Nashville, I think the price was around 68,000. We set you up with the version of the algorithm then, and for a good 12 to 18 months, it's just so easy to watch it just do its thing, right? And the one moment that we always say you have to prepare yourself for is the crash, and that's already behind us. Even Giovanni said before, the worst is probably over, which means that there's probably 12, 24, 36 months of running an algo relatively hands-free. So ironically, people think the danger is now, but setting something up like this, it's actually probably the safest time.
Yeah, absolutely. It's a pity because people never value, they get excited when the price starts to skyrocket, and they leave the community. When they come back, this is where I think how you distinguish the true Bitcoiners from the non-true Bitcoiners. When you're actually follow what is going on and even use it as an opportunity both for DCAing, but also launching algorithms like this, doing options. It should be, if you're a Bitcoiner, Of course, everybody has their lives. For us is our profession, so we are focused on this all the time. But in general, if you have any sizable amount in Bitcoin, it's a lifelong commitment. It's a commitment for the next 20 years, and it's going to change your life. But you don't leave a relationship when times are difficult, or maybe different, and with Bitcoin, you should not think it's the other side of a coin. In fact, in a sense, I like these times better, because I think there are more opportunity when the price is too exaggerated on the other side. You know what happens next, that is going to be corrected in the opposite direction. Here instead, the correction is going up. The problem is that many people are really disappointed and they think the price can go even lower. They get sometimes scared or they don't want to think about it. But it is why it's important to have actually some, let's say, I don't want to say, we are leaders or guides, etc. But, we are professionals that are working in this field. We are spending a lot of time, resources, investment, and we want to share it with you, um, and this is what distinguishes Bitcoin from everything else. We are a community. And by the way, guys, I know that it sounds uh, self self hard, but it is. But there's also a lot of work, a lot of love. This is my book. By the
Oh
way,
yeah.
I will have a bunch of books. With this is just a proof. So this is why it's bound in this way. The real book will have a real bound. And actually, this is a smaller version. I ended up this one is 337. The real one is like close to 540. I, I'm not going to add any more pages because otherwise it's going to be enormous. But yeah, I will have copies of these in Las Vegas if you want to come and pick up your copy and have me signing it. It's a really amazing book. It gives us all the foundation to understand why Bitcoin is a different asset. It discusses network theory, discusses self-organized systems. It doesn't really go deep in the math, even if there are math sessions that you can study if you want. With the help maybe of even AI, or it's mostly high school math, but it separates them where you don't have to read them if you don't want to. You can read everything else, but you can go deeper if you like. So the Kindle copy is available tomorrow. It will be accessible tomorrow. You can even pre-order it now, but it will be available tomorrow. So go on Kindle, look for the physics of Bitcoin. I have also companion book, a companion website. It's called thephysicsofbitcoin.com altogether. And there will be live charts, there will be updates, there will be supplemental material that you can study. And so, yeah, explore all these things.
Nice.
Anyway, we don't have much more comments. Just this one that is funny. Friday lunch. I don't know what this Iranian style means with bombs. You're frying it with bombs, maybe. Yeah. Anyway, guys, thank you so much to follow us. And if you didn't sign up for the channel, right? If you're watching this on YouTube, please sign up. Whatever channel you're following us. Okay. Thank you so much, guys. See
Awesome.
you next
Thanks,
week.
guys. See ya.
Bye, everybody.